So what does rich really mean? Hey, welcome back to our channel. I'm sure at this point you've watched the video with Robert Kiyosaki, my reaction video with Robert Kiyosaki and the rich man, poor man concepts. If you haven't, I'm going to encourage you to go back, watch that video first, then come back and watch this one because I'm going to share a lot more details based on the great comments that I got from everybody from our channel. My name's Jerry Masisak. I'm part of the W.A. Smith team. I'm the tax strategist, the tax guy, the man with the tax answers. All right, so now I'm going to go over to the whiteboard and I'm going to share with you what my definition of rich really is. All right, so let's get started. What's definition of rich? You ask that to people, they're gonna give you a number. That's not my definition. My definition of rich is control. Do you have control? We're gonna go through some concepts here. After I'm complete with that, I'm gonna give you an apples to apples comparison of these two situations. Really what I'm looking at this is from the angle of an employee getting paid on a W-2 versus a contractor getting paid on a 1099. Now, whether you're 20 or 70 or anywhere in between, this applies to you. If you're a contractor now, if you think you're going to be a contractor in the future, this applies to you. So these concepts are super important. So control. What do you control? You know, as an employee, very, very little. How much money are you putting in a retirement plan? Do you contribute to an HSA or an FSA or something from that standpoint, tax deduction wise? If you're working from home, which there's a lot of people out there that are doing that, you have no deduction opportunity. Tax code changed that after 2017. So really, as you can see, as an employee getting paid on a W-2, not a whole lot of control options for you. Now, let's shift over to if you're getting paid on a 1099. And again, whether this is a side hustle, whether this is your main job, it's super important to understand the control that you have with this. And really, I'll break it down into basically four specific pieces that you are in control of. Your entity choice. How are you taxed? Are you a sole proprietor? Are you an LLC? Are you incorporated? If you're a sole proprietor, that's your default. Quite simply, default for me means worst for you. Best for who's ever giving that default. So best for the IRS, probably worst for you. Are you a LLC? Do you have one owner? Are you an S-Corp? Are you a C-Corp? C-Corps, normally bigger companies, double taxation. An S-Corp, most likely most tax efficient opportunity vehicle for you because of options. And those options are how you pay yourself. You can bucket your income. And I'm gonna specifically zero in on that S-Corp because I think that's where most people should fall into. Now, everybody's different, so you'd have to go through that with whoever your professional is. And if you don't have one, you need to find one that can help you through this. So owner's pay, bucketing your income, compensation, distribution. Distributions have something called QBI, Qualified Business Income Deduction attached to it. Very powerful. It's a 20% deduction right off the top. And as I'm going through this, if I'm talking about a concept that you'd like to hear more on, hit subscribe and leave the comments so that I can share that with you. Retirement plans. You control your retirement plan. 401k, SEP, simple. Positives and negatives to all of them when it's all said and done. Which one fits you? Again, control, rich, your choice. And then deductions. You have opportunities for deductions. And what does that mean? You know, you're working out of your house, you have opportunities there. There's things like 280A, your cell phone, Wi-Fi. You have plenty of what I'd call simple, those are your simple deduction strategies. We could get way more advanced with these types of strategies. And that goes for the retirement plan as I skip back up there. You have endless opportunities in terms of how you want to profit share. And if it's only you and you have no employees, it's all you. You're controlling the whole game then at that point. So again, all of these items here, you are in control of. And you get to make the best choice for yourself, and that makes you rich. Now, here's a number, simple example, and we're gonna go through and I'm gonna show you apples to apples, the tax impact of these kind of choices. All right, so here is a simple example and kind of went apples to apples between if you're an employee or if you're paid on a 1099 as a contractor with $100,000, okay? This side, you're getting paid on a W-2. This side is getting paid on a 1099. Important to understand, you're getting taxed at a gross number on the W-2 side and a net number on the 1099 side. So in the previous concepts that we were talking about, I talked about deduction strategy. That's where the deduction strategy comes into play because it's a net number versus a gross number, okay? So that allows us to shrink our tax base. Next line I have here is 401k. I left them the same. This is at the mercy of the employer. This is at the mercy of you. You can decide if you want to do a 401k or a simple or a SEP. There's many retirement plan opportunities, but for comparison's sakes, I assumed the exact same. But again, whether you have one employee, whether you have no employees and it's just you, the 401k is an option. You got 401k, you got HSA. Again, over here, you have all kinds of choices. HSA, if you don't know what that is, that's a health savings account. Very underutilized tool. If you want to know more about that, I'd encourage you to leave me a comment and I'd be happy to explain HSAs and health savings accounts and how those work. It's whoever you're working for, it's really their choice on whether or not those are options for you. But here is, these options exist for you as a contractor. So just because you don't work for somebody doesn't mean you can't have a 401k. Just because you have no employees and you're the only employee doesn't mean you can't have a 401k. That option is available to you. So apples to apples here. Then we come down to probably one of the most important things, that's the tax component of this. Over on the side of the W-2, really, there's not much you're gonna be able to do at this point. These numbers are just gonna get calculated out based on the tax code. And I assumed in here that it's a single taxpayer, that standard deduction that kind of works from their house. This is really kind of how this is gonna lay out for you. You've got FICA tax, you've got federal tax, and you got state tax if you live in a state that taxes, and I just assumed a 3% for comparison purposes. You could have local tax also if you're unlucky enough to live in a state that has local taxes, but it would kind of work the same way that the state tax operates as well. Now, what I really want to focus on is on the 1099. You're getting taxed at the net. In my example, it's a 12% rate versus a 22% rate. Those are your marginal brackets. So by allowing a deduction strategy, that allows us to lower what you're getting taxed on when it's all said and done, which is going to be really obvious when we're talking about the tax component down here. So on a 1099, you can see you're paying less FICA tax. Important to understand how FICA works. And FICA is Social Security and Medicare. It's a 7.65% statutory number based on gross. And for an employee, gross wage. Again, gross over here, net over here. So you have no control over that. You're paid 100, you're getting 7.65 withheld. On this side, the contractor, you control what your compensation is. So we talk about FICA, it's a withholding here, but your employer is actually paying the other half of that for you. Over here, you're paying both halves of it. But it's still less. Because again, you control it with your compensation strategy. Both halves of FICA can be used to your advantage also. The federal, you'll see pretty significant. That again has to do with our net number versus our gross number. Your deduction strategies can be anywhere from a home office, you might have travel, networking. There's a plethora of opportunity when it comes to deduction. Nothing on the W-2 side can really be deducted. You're working from home, you have no options. That's the way it goes. Pre-2018, there was opportunity for deduction. That doesn't exist anymore. But you still have it over on this side. The state, again, works a lot like in conjunction with the federal. And again, I chose a 3% rate. So you're gonna see there's also a reduction. And again, that draws back to the fact that you are getting taxed on your net income versus your gross income. When all this gets spit out, you know, you've got about 56.7 on this side, you've got about 64.4 on this side, which means that you've actually got more money on the side of the contractor, again, because you have control. And when you have control, you have opportunity to manage your wealth and be rich. I think this is super powerful for anybody that's self-employed, could be self-employed in the future, or has a side hustle, where maybe this isn't your permanent income right now, but could be. Our channel's got other videos that cover this in more detail. If there's anything that we covered that you don't see, drop it in the comments section. In the meantime, make sure you subscribe to our channel. Make sure you hit those notifications so you don't miss our next video. See you next time.